Alright guys, we're gonna go ahead and do a series on gold trading, and I'll probably be posting it maybe about once a week. More than likely it's either gonna be Sunday or Monday's trades. I do trades throughout the week, but it'd be a little bit too much to try to post. Don't want to put too much information here on the YouTube and get you guys overwhelmed, but I do want to do a series for all of you who are wanting to learn a little bit more about trading, and I'll go through some of the step-by-step processes that I do beforehand before even looking to trade the markets on any market. Just basic price action and structure is what I try to do, and then from there gauging levels or specific price areas that I want to trade from. I'll wait for the market to get to those levels, show me exactly what it wants to do, and then I'll look to place a trade. But we're going to start this series off. This is going to be series number one, video number one of gold trading on Sunday. And we'll go through the gold trade that we actually took this past Sunday so you guys understand the market structure and the entries we're actually looking for. I'll also pop up some of the volume profiles, overnight highs, lows, previous day highs, and closes on a 4-tick chart for you guys. So that way we can kind of get a little bit into depth about what we kind of look at. Now, I usually just purely use price action and structure, but a lot of people like to use other things such as volume profiles, also volume indicators, ATRs, RSIs, all this other stuff people like to use. So we'll implement that in there so you guys get a better idea of how you can use that to qualify specific trades that you're looking to get into. But we'll start with this gold trade here. I always start with looking at a higher time frame chart. We'll always start on a 10-tick range bar chart to look at exactly what the market wants to do on a bigger picture. And this is what a lot of professionals tend to try to do, is they look at the bigger picture before they try to zoom in, just so they can get a full idea of what the market really wants to do. From there, you're going to gauge and identify specific levels that you want to trade from, and then you're going to try to qualify a trade based off of the strategies that you have. So on this gold trade that we took earlier, we'll go through the bigger picture. You can see on this bigger picture on the gold, the markets did move higher. You can see a couple gaps, and the market did come up, I'd say, into about 1480, and then from there started to create lower highs and lower lows. You can see the peak here and also a peak right over here at about 76, and from there it attempted to come back up but failed every single time that it tried to pull up. All right, so as we're getting closer to where we're trading, you can see the market came into about 73.4, and then it moved its way back down, and it started to respect a downward trend. All right, so when we're looking to trade, we're somewhere right around here, maybe about the 61 to 60.9 areas where we're looking for an entry. And from here you can see already the structure starting to build. You have your horizontal resistance lines at 73.4, and what I really like to do is I like to trade with the trend. I can do fades, which means you're trading against the actual momentum and trend direction, but I usually only stay in those types of positions for a short period of time. I don't really try to hold them, but when I'm trading with the trend, that's when I'll try to hold some trades for a little bit longer. Now this gold trade here, we're going to respect this trend here. You can see this trend line here, which is like an arrow that we put on there, and the trend line is being respected every single time. It does break up into 67.4, but it comes right back down and continues to make lower highs and lower lows. Now when we get into this area, you can see that the prior high was over here at 67.4, broke down, created a new low, and it started to use this area of support as resistance. It came up, failed the level, came back up to 62.6 and failed it again. So when we see that on a higher term chart, we're actually looking to identify levels below for support, and also once we break that level of support, we're also looking for underlying levels of support. So you can see if we zoom in and we scroll out of the chart, actually you could see another level at about 58, 59 as some support right over here on the prior days back, which was about November 13th to the 12th. So when we're scrolling back into where we're at, just doing that alone will be able to help us identify where the supports are going to be next. All right, so if we're in at maybe 60, which we entered in I think about 60.9, 60.8, for a short opportunity, we're already looking for an exit point. Anytime that I look to trade, I'm only entering the trade with an exit in mind. That's the way that I look to try to trade. If I don't have an exit in mind, then I shouldn't be trying to enter the markets. If I don't have an identifiable level that I'm looking for to place a trade and to qualify it with my strategies, then I shouldn't be looking to try to enter the market, just because then I'd feel like I'm gambling, and I really don't like to trade based off of gambling. All right, so we enter in at about 60.9, and that is based off of what we're looking at on the higher term time frame chart. And we're looking to exit right around 59, and then we wanted to try to target maybe about 58 below, but we had 2 lots on there, and you're going to see in the video we also had 3 lots on the S&P 500 for the gap trade, to move into about 24, 27, and also 32 above, which in the US session we actually get all the way into that level. So, but just for this gold session, we're going to talk about what happened, what took place. Again, we did follow and respect the trend direction, and we placed a short. What short means is we placed a position to sell the market, basically saying that we're going to enter in at 60.9, 60.8, and the market should start to move lower from there. That's what you're saying when you're selling the market. If you're looking to buy positions, you're saying that the price that gold is at this specific time should move higher into a higher price. So if it's at 57, it should move into about 62 is what you're basically expecting the market to do. Right, but in this case, we're respecting the downward trend. The bears are in control. That means you got a lot of sellers in this market, and we're looking for this price to move further down. All right, so we're going to go over to, once we do this on a 10 tick, we move over into a 4 tick chart. All right, a 4 tick chart basically is to zoom in and get a bigger, closer view of what we're looking at in the market. So you can see we actually had our positions entered in somewhere right around here, and this one is going to have a little bit more information. Like I said, I use basically price action and structure, so all these volume profiles, previous day highs, pivot points, volume weighted average prices, and opens and closes. All these other stuff I can apply to my chart if I really want to, but for the most part I don't really use that too much in my trading, just because I can kind of identify clear supports and resistances, because I've been doing this for years and years already. I've been studying charts for a long time. But if you want to use other things to qualify trades and to give you a better idea of the trade direction, these are good things to use. So we'll go over it a little bit. You can see we're in the same area that we were looking at on that 10 tick, but you can see we had 62 as a resistance here, and we failed that level on 1, 2, and about 3 times we failed to get past that level, and we're continuing within this downward trend. You can see if you draw an arrow, it did pop a little bit above it, but it's starting to continue to make higher lows and higher highs, right? So to follow structure, you can see what we do is we create supports and resistance lines to see exactly what the structure of the market is doing and if it's going to continue in the trend. So you can see it breaks lower, uses the prior level of support, which would have been right over here, as resistance 1, 2, 3, 4, 5 times, and continues lower. Same thing here, prior level of support, uses it as resistance 1, 2, 3, 4 times, and continues lower. So our entry is going to be right here at the previous day close. You can see how that lines up with our resistance rotations, and the market starts to pull down from there. Again, we look to exit from 60.9 and 60.8. We look to exit down below at about 59, 59.1 to take about $270 off of the gold market. And then from there, if we wanted another trade, we would look for our next best trade setup, which means it's going to follow a specific strategy that we look for, and we'll go over that a little bit later. But this first video of the series is going to be basically following structure and price action. All right, so you can see our entry. If you look at the volume profile, markets are going to move from volume to volume. And if you guys really want to go into an in-depth teaching of this, I would say come visit us here at TRADEPRO Academy, and we can go over it, and I can go through it with you guys. But as for just giving you guys a brief touch up on trading itself, this is what the YouTube channel is going to be for, to give you guys an idea of what we do every single day, how we follow structure, how we follow price action, and how we follow a strategy or multiple strategies that we use to trade. Right, so volume profile here says that we have a volume cluster. Basically, volume cluster means that's where a lot of people are trading, right? A lot of times there's what they call a point of control, which becomes a magnet, which is this yellow line up here. But we're way below that point of control. Volume cluster here and volume cluster here, you can see volume building up right down here, right? So if markets move from volume to volume, if you have price struggling to get back up from this area and you got a lot of volume coming right into this area, these high volume nodes, they can create a level of resistance and even act as levels of support. But this volume node here sticks out for me as an area to look to try to short. Why? Because we're one, in a downtrend. Two, you got volume building up below. Three, you got the previous day close, the overnight high, and the point of control down below. The previous day high is way up over here at 63.2. And we cannot get back up there, right? So every single time we try, we fail. On 3 occasions we failed, and by the third time of the rotation, that goes in line with the actual strategy and qualifier that I use to look to try to short the market into the direction that we should be going, which is down back into the volume cluster. So again, our trade is based off of that. The higher term chart, you could see we were in a downtrend, and the smaller term chart, you can see that we're actually respecting that downtrend with rotations to enter the market to look to short it into the next volume cluster. But yes, that sums it up. We're going to go ahead and play the video for you guys so you guys can see exactly how the trade played out. We're not going to go over the S&P 500 trade because that was a really long trade for the gap trade, and it worked out really well, but it took over 8 hours to actually get there. But this gold trade went really quick. So this is going to be a series on trading gold itself and how to use specific indicators to qualify your trade setups. All right, guys, you guys take care. You have a good day. If you guys have any questions, visit us here at TRADEPRO Academy. Take care.